Comcast officially emerging the winner of its long-fought battle over media company Sky, and that could have big implications for streaming giant Hulu. Let's bring in Julia Boorstin from Los Angeles with all the details. Hey, Julia.
Melissa, Comcast is paying $40 billion to acquire British broadcaster Sky, topping the bid of 21st Century Fox and its new owner Disney by about 10%. Comcast paying about 38% more than it initially offered for Sky. Comcast saying that Sky will increase the company's international revenues from 9% to 25%, giving the combined businesses 53 million customers globally to allow it to invest more in content. Now, on the winning bid for Comcast over the weekend, Comcast shares losing about 6%, Fox shares gaining 1.5%, while Disney added 2%, and rival Netflix gained 2%. Sky shares up about 8.5%. Now, this deal also makes rivals Disney and Comcast co-owners of two different valuable media companies. Fox and parent Disney still own 39% of Sky, and Comcast still owns 30% of Hulu and just added 3 directors to Hulu's board. But with Disney owning 60% of Hulu once its Fox acquisition is completed, there's speculation that Disney will try to buy out Comcast's stake. Now, these two things cannot be directly related because of the rules in the UK, but Comcast is definitely interested in pursuing the acquisition of the stake in Sky that Fox and parent Disney will own. So there's a question about how these two companies are going to handle the fact that they each have a minority stake in the other company's assets. MoffettNathanson writing in a note today saying, quote, "It is unclear at this point whether Comcast will eventually acquire the balance of Sky from Fox Disney, but it is certainly a logical possibility if such a transaction were to be part of a larger cleanup transaction that set Comcast's 30% stake in Hulu to Disney. It would be significantly more accretive for the simple reason that Hulu loses money." Now, it's going to be really interesting to see how all this plays out, Melissa. They have very strict rules in the UK preventing a trade of those assets. But separately, as they pursue acquiring those minority stakes, it definitely does make sense that these rival media giants would prefer to avoid having to share ownership of those assets with each other.
I mean, could we be in a position, Julia, where Fox urges its own shareholders not to accept the Comcast offer, and so it does remain the minority holder in Sky, which would make it much more complicated for Comcast?
Yes, so that's, I mean, it's very possible that that Fox/Disney would choose to hold on to that 39% of Sky. For the deal to go through, for this deal that was announced this weekend to go through, Comcast just needs to get the shares of 50% of the shares to approve the deal. So as for that 39% minority stake, we'll have to see what happens to that. So still in play.
Very complicated. Julia, thank you. Julia Boorstin in Los Angeles breaking it down for us. What do we make of the deal here? I mean, Comcast shares are down 6%. We should note that when Comcast bought NBC Universal, when it bought AT&T Broadband, it saw similar.
They were punished.
Exactly, similar share declines.
Well, again, the winner's curse, especially in an auction-type setting, that's something that I think the market is the first reaction to. I think we were arguing a long time ago that actually this was the asset that Comcast should be going after, and this is actually the one that made strategic sense for their global model. So I'm not going to throw them under the bus. I know they're the parent company, et cetera, so let's get that out of the way. But bottom line is I think this is ultimately accretive. I think satellite TV is in decline, and that is something to be worried about. But right now, I think this deal is what they wanted all along.
You know, in an Oppenheimer downgrade of the stock, along with MoffettNathanson's downgrade of the stock, but Oppenheimer specifically said that they would prefer that Comcast spend money investing in the United States where the competition is much greater. Why invest overseas when there's competition knocking at the door right here?
Well, I'm not really sure. Maybe it's cheaper to do that if there's more competition here. I don't know. I mean, well, the shareholders of Disney were telling you we're happy that you didn't buy it. Right. So that was up today because whether it was a price thing or whether it was because, look, you've already spent too much money to do Fox. You don't want to be that levered. Let somebody else be that levered. So, I mean, which would also explain why Comcast is down. It's early to say, though. We don't know how it's
or their competition is not as strong abroad, so they had a better shot at investing there versus investing here.
Right.
That's the way I would look at it. But Comcast has underperformed for quite some time. It's going to underperform probably in the near term, but I'd still be a buyer on this dip.
All right. Well, the chart master is over at the Plasma with the one name in the media space that's looking like a buy. Hey, Carter.
Hi there. So Disney, obviously the maybe most important one of all in many ways, or at least for a long time. I want to talk about media lagging the market and then focus on Disney specifically. back to '89, media has almost always outperformed the consumer discretionary sector, and yet over the past 3-4 years, it's lagged, and you can see that here. What I have, of course, is the S&P Media Sub-Industry Group, which has got all of the names you've spoken of and others, versus the market, and this disconnect, I think, is the opportunity. So if we were to move forward, what I have next is the same chart, but then I've put Disney in. So again, just to put this in context, we've got the S&P, we've got the Media Sub-Industry Group, and then you've, of course, got laggard Disney. And I think that's the opportunity. So let's look at Disney long-term and then the here and now. Here is the run-up since the '09 low, and then here is this basically dead money period for the past 3 to 4 years, massively underperforming the market. I think you can draw the lines like this. There's a lot of tension set up here, and what we know is that after basically triangulating into the apex of this triangle, we have finally, just tentatively, broken out and are sitting here on the cusp of doing something, I think, quite important. In terms of the here and now, no drawings, judgments by me. What I see when I see that particular chart is the following: a well-defined cup and handle, or said differently, the proper setup for ultimately a run to new highs. Disney peaked, of course, in August of 2015, associated with Star Wars. That high is around 122. I think we're headed there.
Come on over, Carter.
Just
Stephanie will bring the chair
Nobody
in.
does the
Triangulate.
Cup and handle.
You had me at triangle. Thanks, Stephanie.
Come on.
Fantastic.
I'm going to ask you a self-interested question. How does the Comcast chart look?
Well, I mean, this is a struggling asset in terms of the chart itself.
Right.
And then there are ones that were really poor for a long time, like a Dish that tried to come back to life, and they're struggling. That's the interesting thing, because if you look back through the 80s and 90s, media basically dominated in terms of performance, consumer discretionary sector, and then of late, let's say 3 to 5 years, it's really been a laggard area. Disney is the opportunity, I think.
So when you see Disney as being the opportunity, and you overlay it, of course, with the rest of the sector and the rest of the space, do you see that they might go up together and Disney might outperform, but nonetheless the whole sector can move higher?
Well, there's also not sort of a spin to this, but this might just be a heads you win, tails you win. If and as the market keeps going, Disney trading at 16 times versus 21 for the market has some defensive characteristics, quite possibly. And indeed, it also is the opposite, right? If the market falters, those defensive characteristics might just hold up.
My technician friend, did Netflix do what it needed to do on a technical base? Trade it down to 305-ish, that April level that we exploded from. It's been off to the races.
Scratch the niche here, by the way.
Say no more.
You really hit a chord. You see how excited he got?
He just like
His eyes lit up like Christmas morning.
You should go up there and draw it. Right? No, it would be perfect. Right? Came down, finding support where it needed to, and showing relative performance where it needs to.
All right. So on your charts, I see your cup and handle, which, okay, I guess that's great. Is that in any market, flat market, or is there any kind of caveat that you have for that chart to continue higher?
Sure. So formations, they're reversal formations. It's how something that tops out or bottoms out. What that is a stock that comes to life, falters, goes back to the level, and then falters again, but falters in a more shallow way. That's the cup and then the handle. Ultimately, what it is, we're probing those highs, and the prospect is the longer you spend at a high, the more tension there is ultimately to exceed it, because you're removing supply. You're removing from people from above who, having now gotten their money back, are out of the market.
Carter,
Cup and handle.
Thanks.
Carter Braxton Worth.
He gave a little Louise Yamada stuff there. The longer in space, the higher in outer space. Remember that whole
the base,
thing?
the higher in space.
Get it right.
Come on.
You're
Poor
close.
Louise. I hope
Close.
she's not listening to you.
Of course she
You
is.
like Disney?
Well, I like Disney. I'm long Disney. I would make an argument that when he said heads you win, tails you win. Is that what you said? Are you still here? Yeah. Okay, he's still here. Heads you win, tails you win. I don't know if we goodbye the guests. So,
I did. Did you say thank you, Carter?
Thank you. Thank you for being here, by the way. Excellent stuff. So, but my view is that Disney is actually bringing the whole sector up. Remember, Disney was the multiple everyone else traded off of. Disney is at 16 times. If you believe Disney is worth a 16 times multiple, you start to say the rest of the media sector is going to begin to retake those multiples that they lost a year and a half ago. And I think they do. And I think that Comcast chart does.
Yeah. Karen?
I like CBS. I liked it for a little. I liked it since all of the controversy started, and I think it is possible we could see a deal.
Yeah.
Discovery Communications, quickly. We started talking about that stock. I think it was $24, $31.5 now. I think Seeking Alpha, Delivering Alpha, that thing was one of the best
Delivering
ideas.
Alpha.
Yeah, thank you. That was an idea that day, if you recall.
CNBC conference.
That's what I said.
Get it right.
I mean, it's hard for me. I'm getting older. I forget things. I did Carter Worth, though, by the way.
Yeah.
He's
Glad
gone.
you still remember that. Thank you.